Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 12th of December. Non-OPEC oil producers reach consensus. Non-OPEC members took their turn during the weekend and agreed to cut output by 558k barrels per day, a bit lower than the 600k rumored a couple of weeks ago when OPEC nations agreed to reduce their own production by 1.2 million barrels per day. WTI opened with a gap up on Monday and continued trading north during the Asian morning. We believe that besides the non-OPEC deal, some comments by Saudi Energy Minister on Saturday may have added extra fuel to the oil spike. The minister said that the kingdom will cut substantially to be below the level it committed to on the 30th of November at the OPEC gathering. The gap brought WTI prices above the resistance now turned into support barrier of 53 to hit 55.30 before retreating somewhat. Following the break above the key obstacle of 52, we believe there is a lot of room for further advances. That break confirmed the forthcoming higher high on the daily chart and turned the medium-term picture back positive in our view. We would expect a decisive break above 55.30 to set the stage for extensions towards the 57 zone, marked by the inside swing lows of May and June 2015. Looking ahead, market focus is likely to turn to the implementation of the agreement and the compliance of all members towards it. Considering OPEC's long history of not abiding by its quotas, we could eventually see some market doubts emerge regarding the commitment of the producers to this agreement. Nevertheless, even in the scenario that all members adhere to their limits, we still remain skeptical with regards to a long-term healthy uptrend in oil prices. Major oil exporting countries like the US are excluded from the deal, which could complicate things in the future. Continued gains in prices could probably invite US shale producers back to the market, which would in turn increase supply and thereby cap any further price gains. As for today, the economic calendar is almost empty. The only noteworthy indicator that is due to be released is Sweden's PES unemployment rate for November, but no forecast is available. As for the rest of the week, on Tuesday we get China's industrial production, fixed asset investment and retail sales all for November. In the UK, the CPI data for November are coming out. On Wednesday, the spotlight will fall on the highly anticipated FOMC policy gathering. At their latest gathering, policymakers judged that the case for an increase in the Fed funds rate has continued to strengthen, which heightens speculation that they will move when they meet again in December. Now, almost every market participant expects the committee to hike rates for the second time in a decade, and as such we believe that the focus will quickly turn to the updated dot plot, the new economic forecasts, and Chair Yellen's press conference after the rate decision. With regards to the US indicators, we get retail sales and industrial production both for November. In Japan, the Bank of Japan will release its quarterly Tankan business confidence survey for the fourth quarter. On Thursday, three more central banks take their turn: the Bank of England, the SNB, and the Norges Bank. All of these central banks are expected to keep their policies steady, and thus the focus of these meetings will likely fall on what signals each bank sends regarding its policy moving forward. As for the economic indicators, we get UK retail sales and US CPI data both for November. Finally, on Friday, we have no major events on the economic agenda. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.